Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about GBPUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical monthly structure level. In fact, what we know is that from here, all these previous massive rejections to the upside have been created. So this level has been acting as a strong historical structured zone for many years. Every time the market tested its zone, the market has experienced strong institutional buying, every time creating massive rejections to the upside. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is rejecting here on the monthly time frame a strong historical structured zone, and there is the possibility of seeing more bullish continuation, as already happened in the past when the market was testing this exact same zone. Let's keep all of this in mind and drop down on the weekly time frame. From a weekly perspective, what we can notice is a perfect inversion of trend. We can notice how the market was creating, in this case weekly, lower lows and lower highs down to test that is strong historical support and demand. And after the test of the level, the market has completely inverted the trend from a structure perspective, going from lower lows and lower highs to now higher highs and higher lows. So we had a perfect inversion of trend. The last move here was the creation of a new higher low. So a low that was higher than the previous one. The next logical step would be for the market to create a new weekly higher high. So essentially the continuation of this weekly uptrend. So here in the weekly time frame as well, everything is quite clear. More bullish price action could be expected away from this level. We can also notice that we had the impulse and correction. Now, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how we have a 0.32 retracement exactly at this zone, and that is the first retracement level at which you expect the market to create the higher low if you are in a very strong uptrend, which is in fact exactly what the market has been creating here. Dropping down on the daily time frame, what do we see? Now, here on the daily, we can notice how the market has rejected exactly the previous level of daily supply and resistance from which this push to the downside was created, which is now turned support and demand. Now, that is exactly what you expect in a situation like this. And in fact, I made a full breakdown of GBPUSD just a few days ago when the market was here, explaining all the reasons for which I was expecting a rejection to the upside away from this level. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But before we dig here into more details from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for the GBP, the first thing that we have to keep in mind is that we are already looking at GBPUSD because all currencies on the spot are traded against the USD. So by looking at the data at the GBP, we are already looking at GBPUSD. And we can notice how institutions with the last reports have been increasing their net positions. We went from 6.5k net positions to 20k, 23k, and now 29.2k net positions. We had another 3,300 longs added just with the last report from an institutional perspective, with 1,950 shorts getting closed. we can see how now institutions are sitting with a total of 94,000 longs compared to only 64,000 shorts. So clearly they're positioned to the bullish side for GBPUSD, expecting more potential bullish continuation. So all this uptrend comes as no surprise considering all this institutional longing. Now, if the market from here will go for a retest of this level, which is quite possible considering that if we look to the left, we can see how we also have some minor structure at this level acting as previous support all across this zone. This level could be retested here, and since institutions are already adding longs, there is the possibility to see even more institutional longing, which could further increase the probabilities of a potential rejection to the upside. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now, back to the analysis. So, if the market will retest this level, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level, continuing the weekly uptrend. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.